Hello, 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 everybody. Welcome, welcome, welcome. Happy Monday. I hope you guys had a great weekend and I hope you had a wonderful day today on the first week of the month. Back into this last quarter of the year. We have to end it strong and solid, right? So today our topic is the tax knowledge every solopreneur must have. So if you are a solopreneur, meaning you are the only member of your business and you are doing everything yourself, I am talking to you today. So hello everyone. Welcome to today's live session. My name is Shane Harris, but many of you might know me around these social media streets as Shane the Negotiator. First off, I want to give a huge shout out to all my solopreneurs out there, especially those who are coaches, consultants, and service providers. I know the grind and I see the passion. And today, I want to equip you with some pivotal tax knowledge that could be a game changer for you and your business. So many of you are the heartbeat of your business. Not only are you delivering services, changing lives, but you're also the marketeer, the accountant, the administrator, the social media manager, the banker. You're everybody. The list is endless with so many hats that you're wearing. Oh my gosh, it's easy to get overwhelmed and easy to overlook or misunderstand certain aspects of your business, like taxes. That's right, taxes. I know you guys love this time of year, right? So, taxes. Well, that's where I come in. So, my mission is to help you navigate these tricky waters. I help coaches and consultants and service providers who feel overwhelmed, who might lack the guidance to achieve true financial freedom, and how? Through expert tax and coaching services. So today, I'll actually break down some critical tax concept tailored to solopreneurs like yourself, and we'll discuss understanding business expenses, what you can and can't deduct. You might be leaving money on the table without even knowing it. We're going to talk about self-employment taxes, why it exists, and how it impacts you, and ways to manage it effectively. We're going to talk about tax deadlines and extension because missing these can actually cost you both in penalties and, of course, peace of mind. Structure your business. Should you remain a solopreneur, or is there a value in considering an LLC or upgrading to an S corporation? We're going to also talk about quarterly payments, breaking down when and how much to pay, and ensuring you're not caught off guard when you actually file your taxes. We're going to talk about record keeping, efficient strategies to track income, expenses, making tax season a breeze. And lastly, we're going to talk about tax planning, proactive strategies to optimize your tax situation to prevent and to for the present and of course for the future. So let's dive into this, and I'm going to pull up a presentation as I go through so you have a visual of what it is that I'm talking about. All right, so let me pull that up. So here is the fancy slide that we have here, and let's jump on into the presentation here. So we're going to talk, today's presentation is going to be for solopreneurs, essential tax knowledge. So let's go on in. So what are business expenses? So the business expenses are costs related to the operation of your business. So this is all business related, activities and expenses or things that you're paying for. That is what business expenses are. Let's go on. So deductible business expenses. So these are the expenses that you can actually write off, because there's deductible expenses and there's non-deductible expenses. You can actually write these off. So you can write off office supplies and equipment, rent or mortgage interest. And this is if you have an office space that you are paying rent or paying mortgage in. This is what I'm referring to. Utilities for business operations. So like your phone, if you're, of course, paying for the water bill, the electric bill, all that good stuff. Marketing and advertising, like you're paying for ads on social media you're paying for Google ads, Facebook ads, IG ads, whatever ads that you're paying that falls into advertising. It doesn't necessarily have to be just ads. It can be anything business related that you're using to market your business. So if you're spending money on, like, I use Canva a lot. If you're using Canva, that's considered a part of marketing and advertising. And professional and development and memberships. So if you're in any professional programs, I know many of you coaches and some of you are therapists, you have certain subscriptions that's related to your business. So like, for instance, if you're a therapist, you might be using USA Today. If you are in the mental health space, like if you are a nurse practitioner or something like that, you may be using a particular site where you going through get clients through the insurance or things like that. So those are all those subscriptions that you're paying for is considered under professional development and memberships. So we're going to go into what's non-deductible. So these are non-deductible expenses. These you cannot generally write these off, and that is personal expenses, fines and penalties. So if you speeding down the road somewhere and you were on your way to a conference and it was the conference is deductible because it's related to your business, and you got a nice little speeding ticket because you was just going way too fast, that fee, that fine and penalty is not deductible. You can't argue, well, I was on my way to the conference, and if I wasn't going to the conference, I wouldn't have got the ticket. No, that does not apply. Lobbying expenses, so of course that's more on the political side. Those expenses are not deductible. So tip I wanted to say, always consult with a tax professional about specific expenses. Now, I am a tax expert, but I am not your tax expert. So the information that I am sharing today is for the masses and may not be specific to your particular situation. So in order to get detail, specifics for your unique situation, it is best to consult your tax professional, your expert, or you can reach out to me. And once we have solidified a contract and payment has been made, then you will be considered my client and I can actually advise you better. But for right now, for the purposes of this video, is for informational, entertainment, informative purposes only. Self-employment taxes. So tax for those who, what is self-employment taxes? Taxes for those who work for themselves. So like yourself. So what makes up self-employment tax? Well, 12.4% of it is for Social Security, and the other 2.9% of it is for Medicare. So you put that together, and self-employment taxes are 15.3%. So of course, if you are an employer and you have employees, you pay half of the self-employment tax. The employees pay the other half in taxes. When you work for yourself and you do not have employees, you are your employer and your employee all in one, and you pay the full 15.3% in taxes. Managing the impact. So number one, deduct the employer equivalent portion. This is what we're talking about for self-employment tax. Two, contribute to retirement plans to reduce your net income. And three, schedule regular payments to avoid year-end surprises. So these regular payments I'm talking about are your self-employment estimated tax payments. That's what I'm referring to. Because you guys don't like to owe taxes. Every time you come to me or I hear stories from other tax professionals, oh, make me not owe. I don't want to owe. It's not up to us to not make you owe. It is up to you for you to not to pay the least amount of taxes by paying the appropriate taxes throughout the year based on your income. It's not up to us. We don't have a magic wand that says, oh, you made $200,000 this year, zero taxes you're going to owe. Yeah, it's not up to us to determine that. So we're going to talk about tax deadlines and extensions. And here are some important dates. So we have April 15th. That is the traditional deadline dates. Now, depending on what day of the week it falls on, if it's a weekend or if it's a holiday, it may not be on the 15th. It may be on the 17th. It may be the 18th, whatever the next available date is. But these are the traditional dates usually. October 15th is the extended deadline. If you were supposed to file in April and you provided an extension, then October 15th is your deadline. However, if you're an S corporation, March 15th is your filing deadline. However, if you provide an extension by that date, your extension is due September 15th. As you can see, I'm only speaking about solopreneurs. So that's why I only have the traditional dates and I have the dates for the S corporation, because if you're a partnership or a C corporation, then these dates may not necessarily apply to you, but this is for the solopreneurs. So April 15th or March 15th, if you're an S corp, these dates apply to you. Penalties. Now, there are some hefty, did I say hefty? Penalties and fees that go into when you are not filing, and when you have failure to file and failure to pay. There's hefty penalties that come with this, and I do not want you guys to get caught up in these penalties. So I want you guys to pay and file your taxes on time. The extension, you have to request your extension by April 15th to avoid any of these penalties. Now, we're going to talk about structuring your business. So as a solopreneur, it's the simplest structure to set up. It's the simplest, the easiest. It doesn't require a whole lot. It just requires you. You can either use your social security number, or what I definitely suggest is an EIN number. It's really simple. You can use personal and business taxes, are pretty much your personal and your business taxes are the same. There is no separate taxes, like for a business tax or a personal tax. It's all done on one taxes for your personal and your business taxes. For an LLC, it has a legal protection, and it has flexible tax options. Again, you also file your personal and your business taxes on the same form. Then we have S corporations. The tax benefits for qualifying, it has tax benefits for qualifying businesses, and salary to owners can reduce self-employment taxes. So if you are paying yourself wages, not if, because you should be paying yourself wages. If you opted to be treated as an S corporation, it's a tax election. So you're, for the state, federal purposes, you are a S corporation to be taxed as such, and you are required to be on payroll and pay yourself wages. So those wages that you pay yourself can reduce your self-employment taxes because those wages are deductible. You can deduct it as a part of your expenses for your business. Quarterly tax payments. So why prevent year-end tax surprises? This is why you actually pay your estimated taxes. Now, quarterly taxes, estimated taxes, the terms are the same. And many of you, it's time to file your taxes and you're so nervous because you're like, oh my gosh, I don't want to owe, or you're shocked to see how much you actually owe. So I'm here to tell you is like, you are in control of how much you actually pay in taxes throughout the year. You are in more control of it than you think. You may not realize that, but if you are making your estimated tax payments, when you come time to file your taxes, you're not going to be surprised with an estimated bill, with a bill or a high bill, because you are going to know exactly what amount you should owe, or what maybe you end up getting a small refund. So when is the estimated tax payments due? So these are the 4 dates that is due: is April 15th, June 15th, September 15th, and then the following year, January 15th. These coincides with the quarters. So for April 15th is for the quarter that starts January through April, and then April 15th is the quarter ends. And then for June, it's between April 16th and June. So then June 4th, 15th, it's the deadline. That's when it's due. Now, April and June, between April and June, those quarter and estimated tax payments is a lot shorter. Then the next one after that is due by September 15th. That is for the third quarter. So that is July, August, and then September. September 15th is due. And then the final one is October, November, and then December, with the payment due the following year, January 15th. So how much are you actually paying estimated taxes? Estimated taxes is based on what you expected your expected annual income is. So you pretty much calculate up how much you're expecting that you're gonna owe, and then divide that by 4 for your whatever you think you're going to owe, divide that by 4, and that is your estimated tax payment for the entire year. So an example of that would be, let's say you made $100,000, and I'm just going to make up numbers and say the estimated tax on 100,000 after all of your expenses would have been $4,000. You would divide that 4,000 by 4, and each quarter you would pay $1,000 to federal, and of course you have to pay to state. So let's just say you expected to owe state of $1,000. You would divide that by 4, and you would pay the state $500 each in each quarter. So record keeping, the importance. The importance of record keeping is accuracy, detailed records, streamlined tax filing. So oftentimes you guys come to me, you guys go to other tax professionals, and I hear the chatter in these social media streets because Shane the negotiator hear everything. You are not keeping you're not keeping accurate records. You're barely keeping records at all, some of you. When it comes to record keeping, you need detailed records. This makes the tax filing season seamless. It makes it easier to go through versus you having to go through and fumble through a year's worth of documentation and trying to recreate your entire year. I don't know about you guys, but I don't remember what I ate last Friday. I have no idea what I ate. I remember the weekend because I went out this weekend after the Tax Pro boot camp that I had, and I remember what I ate at the restaurant. Anything else in between that, I don't remember. So if I have a hard time remembering what I ate on Friday, imagine if I had to go back and recreate my tax records from January of this year all the way up to where we are right now. And even when we finally make it to December, imagine me having to go through and recreate all of those records. Now put yourself in my shoes and imagine having to do that for yourself. It's going to be very daunting. Oftentimes you get frustrated, you get overwhelmed, and you don't want to file your taxes because it's so tedious, and you just want to hand the scraps of pieces of paper, and you're like, you know what, you do what you do. That is not accurate record. That is not going to make the tax filing season go smoothly. It's actually going to cause delays. You're leaving room to make errors. You're leaving room to not get all of the appropriate deductions that you're entitled to. And it just leaves you open to be audited in all kinds of other scenarios that could potentially happen. So accurate, detailed records is essential for you as a solopreneur. So some strategies: use digital tools or software. So I know I use QuickBooks. If you don't want to upgrade to QuickBooks at this time, you definitely have to use some type of, you can use a spreadsheet. You can either use Google Sheets, or you can use the old-fashioned Excel. And some of you are old school and you still want to write on pen and paper. And that's fine. As long as it's detailed and you have as much information on there as possible, then that is quite all right. However, if you are an S corporation, you can't just handwrite. You have to use a digital tool or software, a way of keeping track of your records. You can't just put it on some random Excel sheet or anything like that, because you are taxed as a corporation and you are held liable for a lot more. And there are some compliance things there. So you should not be keeping your records on bits and pieces of paper. That is unacceptable for you as an S corporation. Schedule regular times to update records. You should be updating your records. You should be sitting down at least once a week to go over your records and make adjustments. If you don't do it every week, I recommend at least every 2 weeks, no latest every month. You should find a time every month to just sit down for a few hours and do it. If you do it every week, it's not going to take you hours. You may allot 30 minutes to an hour and go through your books and then your records and be able to just knock it out in an hour, versus if you're waiting to the end of the month, instead of 1 hour, it may take you 8 hours to go through all of these things. Keep separate business and personal accounts. Oftentimes, as solopreneurs, you have one bank account, and that one bank account is usually your personal bank account. Now, you can have a personal bank account, because if you're a solopreneur who did not create an LLC and you're using your social, or even if you're using an EIN, if you do not have an LLC, you cannot open a business bank account because you do not have documentation to show that you have a business. So therefore, you're going to have to use a personal bank account. However, you can use that personal bank account as a business account, but it has to be separate from the actual personal bank account that you use for your personal expenses. So for instance, you can have two personal bank accounts. One you use exclusively for your business. Who cares? For your personal? Who cares what you do with that? And one exclusively for your business operations. So the monies that's going into it and going out of it is for business purposes only. So I hope that makes sense and you understand that. Save receipts digitally. Now, I don't know what's the difference of how they're making these receipts these days, but back in the day, you can have receipts for an entire year and sometimes longer than a year, and you can still read every word on it. Now, you get a receipt, and by the afternoon, it's faded and you don't even know what is on there. So, saving the receipts digitally is going to save you so much heartache because those receipts fade, they crumble up, you might lose it, you might spill things on it. So when you get it, take a picture of it, put it in some type of digital system. If you don't have a digital system, your phone, we all walk around with our phones. Your phone is a digital system. You can label in the photos receipts and drop those in that folder every time you get a receipt that's business related. And lastly, we're going to go into tax planning. So what is it? Tax planning is proactive planning to optimize your tax situation. So it's proactive planning so that you don't have to have reactive panic. So proactive planning is throughout the year. So this is before you actually file your taxes throughout the year. Each quarter, you are sitting with your professional or you're sitting with yourself. Sitting with your professional is preferred, and you're going through what you are projecting to different sequences on what you're projecting to make. What does this mean for your business? And so many other things. You're doing this throughout the year so that when it's time to file your taxes, you're not in a panic at that time because you don't know what's going on and you're not having to put all of these things together. So that's why it says proactive planning. That means before you plan, before it's actually time to file and not after. So strategies, consider your future income and potential deductions. So we talked a little bit about some of those deductions that you can write off, but you also consider the future income. So for instance, we're here in October. We just made it into October on Saturday. We still have the rest of this month. We have November, and then we have December. So wherever you are in your income, in your income revenue, sometimes depending on the type of business that you have, your coaching business or your consulting business, you may actually ramp up your revenue this last quarter of the year. So you can actually sit now and project your income for the rest of the year to see how much more you will potentially make. And then also consider any future deductions that you might potentially have. So you may want to make some purchases and you can start accounting for that. And that is all a part of proactive tax planning. Invest in your retirement plans. As a solopreneur, you can invest in retirement plans. And a lot of times you guys are not aware of that. And I'm here to tell you that you are entitled to do so because you are considered a business. Structure your business wisely. So we talked about possibly being an S corporation. Of course, there's C corporations and there's partnerships and there's so many different things that you can do with your businesses. So having the appropriate business structure can help to save you in not overly paying in taxes, because you will pay higher amounts of taxes as a solopreneur if you are operating as an LLC, or even if you're just using an EIN, you will pay a lot more in taxes than if you were an S corporation. However, you don't want to just change to be an S corporation just because you should be at some income points before I would recommend that you even switching to an S corporation, because you're going to have to worry about payroll taxes, paying yourself wages, and the compliance things that's going to cost the money to do that. And if you're not making enough money, and it's not going to benefit you. So again, as I mentioned earlier, I don't know your particular situation, so don't just take these videos that you see on social media and then run with it. And it's like, you know what, let me go create an S Corp, because an S Corp may not be good for you at this particular time based on where you are in your revenue. And for others, it may be a great time to do so. But the only way to know that for sure is with sitting with myself or some other professional that can actually guide you through that process. And regularly consult with a tax professional, which piggybacks off of what I just said. You have to consult with a consultant on a tax professional or a tax advisor, a strategist, whatever, on a consistent basis. The worst time is when it's time to actually file your taxes. That is the worst time to just now getting in contact with that professional. You should be contacting that professional months in advance throughout the year, if possible. We're now in October. We just made October, as I said. This is a good time to reach out to the professionals so that you can start to plan for the rest of the year and see where you are income wise and expenses, so you can make sure that you have paid enough in taxes and there will be no surprises for you. So that is it. That is the end of this presentation here. So when it comes to taxes, there is so many things that goes into place when it comes to paying your estimated taxes, running your business. And it's not only about you make your money and then you don't worry about anything else. It's more to it than just that. And if you are not careful, you're going to end up owing so much in taxes and then have compliance issues. And these penalties can be pretty hefty. Now, I didn't want to go into more details than what I just did. So in the future videos that I make, I would dive a little bit deeper into each one of those. And of course, you can always join my Facebook group, which is Success Amplifiers, where I have more detail. I have case studies and other tips and things that you can get from that group to help you on your journey. So we're in this journey together, and I'm here to ensure that taxes aren't a daunting task for you, but rather a manageable task on your road to success. So I hope that you found value in this presentation that I just did for you guys. And I hope you took notes, or if you haven't, I would suggest you go back and watch the video or watch the replay and dive deeper in this. Hey, Garrett, how are you doing? Dive a little bit deeper into this, because I want you guys to start taking your business seriously, because if you are not taking your business serious, your clients are not going to take your business serious either. So oftentimes you're going to these coaching groups and you're in these coaching programs and you're on social media and you're talking about people don't want to share your stuff and they don't want to support your business. They don't want to invest in you. Well, ask yourself this: are you investing in you? Because if you're not investing in you, how do you expect someone else to invest in you? If you're not investing in yourself, I'm not going to invest in you. And I'm just saying in a general statement because I don't know who you are, but you have to consider that when it comes to your business. So that is the message. I'll have my link available to you in case if you want to schedule some time with me to sit down and discuss some of these things that we're talking about. You can click the link, and that is at bit.ly/SD negotiator and schedule some time with me. There is a 15-minute chat. Not a 15-minute chat. It's just for us to say, hey girl, how you doing? Or hey guy, how you doing? There's nothing else to go on it. I introduce myself, you introduce yourself, you let me know what business that you have, and we can see how we can actually work together. That is it. There is no advice. There is no anything that goes on beyond that. Now, if you want specific advice or you want to chat more about some of the things that we talked about here and how to implement that in your business, then you would schedule for that paid consultation, and we can actually dive a little bit deeper into that. So that is today's message. I hope you enjoyed this time with me today. And until I come back with another tip, some other more information or anything else, I hope you guys have a wonderful Monday.